So, as you can see, we have some really interesting knowledge on this panel, and I think there's a lot we can learn from this. So I guess the first question, bearing in mind there's probably going to be a mixture of experiences in the room, and I'll sort of give this to you, James, from the corporate side of things, thinking with your Aviva hat on, how did your company arrive at sort of that decision to focus on digital transformation? And I guess as a sort of a side to that question, was there like a straw that broke the camel's back kind of moment in that?
So this is really easy to answer because the chief exec of Aviva came in and said, Aviva is a 320-year-old business, and he said, I want to make it a 320-year-old disruptor. And part of what he recognized was that we needed to transform the business, call it digital, call it whatever you want, but continuing with 320-year-old sort of legacy and ways of doing things isn't sustainable. So it was really easy. There was no straw that broke the camel's back. It was a top-down, we need to transform things. Great.
And Alan, sort of using both sides of your experience again. Again, there must be businesses in the audience who are thinking that they probably need to do this from the corporate side. As the startup that you are, how do you bring them onto that path? How do you sort of start to help them understand that this is a sort of both transformation they need to do, and then obviously from your case, how do you help them understand that your business is the one to help them do that?
I think from the corporate side and from any side, there is complete awareness that digital transformation is happening, has happened, is going to continue to happen. For us, it's always been about the collaborative part. We're not going in to sort of solve one problem. It's to work with them to understand what a number of their problems are and how that can work. And the best example in where Bud has worked with banks, and we've got a public relationship with the likes of HSBC, is all around open banking and PSD2, where historically, and probably a couple of years back, banks were initially looking at this as a sort of regulatory compliant error that they had to correct, whereas we came in saying actually it's a huge commercial opportunity where once you can understand more about a user, and that comes from aggregating all of your bank data, which happens as a result of open banking, you can then start to service them better. And that servicing them is not just with the bank we're talking to's products, but third-party products as well. And part of what we offer is that full experience that makes it a lot easier for them to do so.
Okay, well that actually quite sort of takes us from the corporate side to the more important part, which is really the customer side. And I guess question for you, Louis, what customer benefit are you aiming to deliver or help your customers to deliver? And how do you help them to measure that? Because obviously measurement is so important for success.
So I think for us as a startup, we're trying to make it possible for someone to get access to insurance within a few seconds in the tools that they use daily. So you should be able to buy your cargo insurance or your credit insurance when you're on Amazon or Alibaba at the click of a button. So that's our KPI. Move from 5 meetings to sell a letter of credit to 5 seconds to get access to it. So that's really what we're all about. When we were in the disrupting or transforming the large insurance company, there we had several different KPIs or customer experiences that we wanted to develop. And in some cases, it could be just as simple as what happens if we bring machine learning into our risk rating algorithms. How do we move our Gini coefficient, which is the measure of how predictive our algos actually are, from 75 to 80 because we've used machine learning. So not always linked to a customer experience, but always try to link back the innovation that we were working on to some kind of KPI that shows that there is success in what you deliver.
Okay. And sort of going back to James again, you've come from Aviva, but you've worked with Founders Factory to help bring Brisk to life. What was the sort of the decision making internally between maybe building this in-house or actually working with an outside party to help to deliver this? What was the rationale?
So the rationale was I had the idea about 18 months ago. I peddled it round internally within Aviva. Wasn't high up on the priority list, a little bit out there. So quite simply, I managed to find someone in Aviva that supports Founders Factory. I pitched the idea into them. and that they invested, and we're setting it up outside of Aviva. So that's now causing some consternation within Aviva, because they're saying, why are we doing this outside of Aviva? And it's like, well, if you can't do everything as a corporate, then access and take advantage of the startup community or incubator accelerators to do this stuff. And at the end of the day, big corporates like Aviva are recognizing that it's not all about everything that they do themselves. To be successful, they've got to interact with other entities, startups, that they don't own themselves. So I think it's proving a really healthy example of don't just think about what you can do in the corporate, but access that broader community as well.
Yeah, completely. I was going to say I completely agree with that. The collaboration side, I think, is becoming a lot more paramount now, where corporates and fintechs have realised coming together is going to be a lot more fruitful for both. Certainly from my experience as well, when I first started at Bud, I was trying to exhaust my contacts from my banking days, and I was going in to meet them, telling them about Bud and what we could do for them, and was met with almost defiance, if you like, at the start. Our customers, our data, get out almost. And these were guys I knew. That changed within the space of 6 months, where we got a phone call and said, can you guys come back in, because we tried to do it ourselves. And there's a very good expression about focus on your USPs and API everything else, and I think that's a really core mantra for essentially any industry. If you are very good at something, focus on that, and anything else you can leverage by collaborating with the right people. And that's very much a mantra we work with when we're working with banks, but also partners within our marketplace as well.
Tell me about a challenge you've come across, and how did you overcome it?
And the way we kind of achieved it was to become much more systematic about the innovation funnel. So having, for the early days where you're doing POCs, prototypes, virtually no governance. So my team had kind of full authority to, run a number of POCs up to a small amount of like 50K. And then as these POCs became a bit, out of 10, we had to fail 7 or 8 times. So I was sometimes joking that I was the only guy in the company who had as a KPI the obligation to fail 80% of the time. But that was really important to create that first level of freedom and engagement with the startups, where we could go and say, you know what, Bud, we really love what you do. Let's do a POC, and in 2 months we prove something, and then we have a kind of go no go, and enter a more structured process where from going from the 50K to the 250K, that was a project that was still within our team, but with a bit more steering around it and coordination with IT. Mm-hmm. And then it got into, then we had kind of 3 or 4 outcomes for every project like that. Mm-hmm. Either rest in peace, we've tried a nice prototype, but we need to kill the zombie. Yep. Another one which was, this is a great achievement, but it goes back into BAU. So we kind of hand it over to the business units. Another one which was, still needs a lot of work. And honestly, if we look at ourselves, we're not going to manage it as a large company. So let's spin this off and do a bit like what you guys achieved with Brisk. And we had a vehicle which we set up with a VC to just say, we recognize that this won't be built inside the mammoth insurance company, and we spin this off. And then we had another team that we ended up building after a while, which we called the Product Factory, which was a great product, great idea, prototype is working well. We don't want to spin it off totally. We're a bit in the Aviva situation of we still want to work with it, but still, if we put it back into our group IT, we're going to kill it, and still needs a lot of iteration and test and learn. So we ended up building a team of developers, designers, data scientists, so like 15 people that could scale up and incubate. So that sorry for the long, protracted answer.
I was about to say, if Hokodo doesn't work, you can always go into consulting.
Yeah. Well, I used to be in consulting.
Brisk is a separate entity being set up outside of Aviva, so it's really simple for us to do what we want to do. To be honest, I tap into Aviva where it suits me, and I get free advice from them and guidance, which is great. Funnily enough, on Monday I had a conversation about whether Brisk should apply to the FCA to be independently authorised, or whether to be an appointed representative of Aviva. And after an hour's meeting, my resounding conclusion was, I'm going to just do it myself because it'll be a lot quicker and probably cheaper. So again, having that flexibility to do what's right for this business is fantastic.
Yeah, for us, I think the situation we're in is that because this is so new and nothing like this exists at the moment, the people we're selling to don't necessarily know what they want yet. There's a lot now, we're starting to see sort of people peering over the fence and saying, well, they've got that, we want that plus 10% type thing. Try to differentiate in that way. So how we're structuring it is we know we can innovate faster on our own, and I don't mean that disparagingly to the banks or anything, but we can work with partners and create these MVPs and pilots quickly without having to go through hordes of sign-off process and corporate governance, etc. And how we plan to do that is through our own direct-to-consumer proposition, actually create simple user journeys, i.e. how buying a home touches many different verticals from insurance, savings, the mortgage is the last thing, as opposed to a bank just trying to sell a mortgage. Once we create that, we have the data to show how that works. That then allows us to go to all the banks we work with and say, this is a journey you should be integrating into your instance, and here's the data to support it. So we've sort of flipped it, if you like, that we have the partnerships with the banks that are our distribution channels, but then we can innovate separately and then go to them with the data to sell the premise, essentially. Yeah, completely agree. I mean, with GDPR, you as the customer, you own your data, and it's the value exchange of, well, why would I give you this data? What am I going to get in return? So there's partners we work with, and there's a couple in the digital mortgage space that will use your data to be able to understand, A, what mortgage you're on, but B, your affordability. So rather than you, at the end of your 2 or 5 year fix, for example, going to the market and looking for the best rate, is that will automatically happen in the background. So your affordability changes as you get a pay rise, a bonus, or you stop spending as much because you've had a kid or whatever the reasons may be. That will come to you. There'll be a notification that will say, we found you a better mortgage, this is the rate now, and this is why it's suitable for you. And that's where you will share your data for that value, if you like. And that applies to any vertical, whether it's insurance, utilities, etc.
So without going too far down the rabbit hole on this one, because it's a completely separate panel, what sort of data systems do you need to start to think to put in place? Because, you know, Aviva, you know, old insurer legacy systems, 300-year-old, 350-year-old organisation know that story pretty well. Yeah, how does sort of the legacy data systems interact with sort of the modern startup style data systems, which are a lot sort of probably easier to work with this sort of stuff with? I mean, without going into too much detail, but sort of how are you guys applying that? So Louis, obviously interacting with your customers in that way.
Yeah, so we're using 2 different types of data sets. I'd say one is the traditional ones that every insurance company would use, with credit bureau data, companies' house data. Actually, to save ourselves a bit of time, we use a lot of due deal data, because as we're aiming to come back to our customers with sub-second answers, and that means, you know, pricing and underwriting within a few milliseconds, we need to have strong connectivity to our data sources. So that's pillar 1, and then pillar 2, it's leveraging open APIs and very much in the way you described, partnering with insurers, banks, or other types of distributors to get access to the data that is required to service one vertical at a given point in time. So for cargo insurance, we need who's the buyer, who's the seller, what's the amount of the transaction, what are the goods being shipped. And once you have that data, plus the kind of basic admin and financial data at the back, you can start doing funky things in the underwriting.
Great. James?
It's really interesting, and Aviva, along with many other companies, I'm sure has a big legacy that they have to try and deal with, and that is a live problem and a live challenge. I think there's a bit of accessing the data and the capability that exists in the ecosystem outside of Aviva, but you know, there are different solutions and many debates about this. One of Aviva's answers is to create this data lake where they just dump everything and then almost try and ignore the complex legacy and just say, how do we use modern analytics capability to go in and to access that data and almost sort of bypass the legacy to do the things that you want to do with that data. Yeah.
I think that's the fortuitous thing that startups are in. They're not having to deal with either A, legacy data, or B, legacy data systems, which is where that speed of traction comes in. And we're dealing with a lot of data when people pull all of their bank accounts and credit card data together. And what we do is we sort of anonymize all of that and create persona sets so we can understand in exactly the same way as other industries do, like Netflix, Spotify, that if you listen to this kind of artist, other people like you like this. We're doing exactly the same at Bud. So if you have these types of credit cards, you spend at these types of places, here's other places that we think are suitable for you. And that enriches time as you evolve and you add more users, more data, and you start to understand more about the user.
Is there a risk then that the banks diminish their brand by saying, sorry, this is a third-party provider? You're out of luck.
And that's again where we use these guys, due deal as well. So we do all of our sort of compliance and our due diligence on every partner we work with. And as part of this system, that gives us the ability to see and get triggers of any problems that are untoward. But the system is built in such a modular way. And we had this last summer where one of our partners went into liquidation. At the flick of a switch, we can turn that off so it's no longer being showed. And then we speak to any customers that have it at this stage. Now that will change obviously as we scale up because we're a startup and we can't speak to millions of customers if they have different products. But yeah, we're figuring that.
You know, we're in a space where lots of people are doing lots of really interesting things. And each of us have our own little sort of heroes in how they do it. I'm sort of just a personal question. Who's doing what you, who would you like to emulate in what you do?
For us, we're trying to do in insurance what Stripe did in payments. Mm-hmm. And in the same way, like if you're an e-merchant, you can get access to PayPal or to Stripe just within a few seconds using their APIs. We want anyone to be able to become a distributor of insurance just with a few lines of code. So within 1 hour, you should be able to integrate our services.
Okay, cool.
So this is going to sound like a bit of a bromance, but for me, I was introduced to Bud a couple of years ago, and whether it's Bud or some of the other challenger banks that have come up, I just love the way, you know, Tide's another one. I love the way that for me as a startup business, I need a bank account. There are people out there that can do things in a really quick way compared to if they weren't there, it would be really, really hard.
Great, James. I'll either be later. I'm currently reading the Everything Store, which is a book about Amazon, a completely separate business, but the network effect is the thing that really attracts me, and that's obviously my domain at work. And what I'm trying to create at the moment at our place is what happens already in other verticals, essentially, to bring finance up to speed. And that is, the more you use this type of platform, the easier it becomes for you, for the partners we work with, and the banks. So using the example of getting a mortgage, for example, there's multiple different pieces of information that the lender needs to know: your affordability, your credit score, how you're spending your money, needs your last 3 months utility bills, et cetera, et cetera, et cetera. And we can start to collect literally all of that information depending on what providers you use. So we work with a bill management company called OneDocs, where they pull across all of your bills. So by having that, it gives you the alerts when your bills are due, or when you've had a spike in payments, or when you're due to change from a utility contract that's out of date, for example. The point being is you have those utility bills then within like a vault, if you like. So when you're applying for the mortgage, the ideal is you literally thumbprint, it pulls all of the information from the network that will validate and approve your mortgage in literally a matter of seconds. So that's the vision we're trying to get to. And like I say, with the Amazon thing, it's about, they've used that network there. It's almost like the go-to place to go to, and that's really what we want the technology to be, is that is just the default of how banking becomes.
I was having a conversation in the networking piece, and I think consumers have different levels of appetite. For me, of course, I'd say this, I'm frustrated that there is so much data out there about me that my bank has, but they're not using it to help me. So, you know, this sort of stuff that Alan's talking about, bring it on. That's what I want. But I recognise that there is a segment of the community that, ooh, that's a bit too intrusive. I don't like that. If it's working in service of me, then bring it on. I want it.
Guys, I wanted to say thank you very much for your insights. I've certainly learned a lot that we can take back. I wish you the best in what you're doing in the future, and best of luck. And thank you on behalf of the audience. Thank you.
Thank you.